Don't think about what it is. Think about what it does. Welcome to WealthX, insurance that doesn't feel like insurance. What it does: connect your policy cash value to market-based indexes, such as the S&P 500. And when the index goes up, so does your cash value. Inside your policy, this cash value accumulation is tax-free and locks in each year. So you have no taxes on your increased cash value, and since you're able to lock in your gains each year, should the index have a negative return, you won't lose any principal or accumulated interest. When you want your funds, you have access to them tax-free, so all of your gains and principal are available when you want it. And since we are talking life insurance, the assets are designed to pass on to your heirs, generally tax-free. Don't think about what it is. Think about what it does. Tax-advantaged, interest accumulating, downside protected, real-time liquid, generational asset. Build resources for the future without market risk. With WealthX, your cash value accumulates tax-deferred based on market performance and will never decrease due to market volatility. Here are the indexing basics. Your cash value inside the policy earns interest based on the positive performance of an external index, which is a group of investments within a particular industry or market segment that you choose. When you purchase your policy, you can select one or more index allocation options, meaning you can diversify as you desire. The performance of your chosen indexes are tracked, and based on the indexing crediting method, which we'll get into in the next video, any indexed interest is calculated and credited to your policy's cash value annually on your policy anniversary. It's important to note that with external indexing, your policy does not directly participate in any equity or fixed income investment. You're not buying shares in the index. That's how we can guarantee that your policy's cash value will never decrease due to a negative indexing performance. Protect your assets with WealthX. The crediting method determines how your indexed interest is calculated. When your index allocation options show a positive performance for that policy year, your interest will be credited to your cash value. Your index allocation is comprised of both an external index and your crediting method. Different crediting methods determine the interest you receive in different ways. For example, an annual point-to-point. This method tracks changes in an index from one policy anniversary to the next. With a positive change in the index from the previous year, any indexed interest would be credited to your policy. With a negative change in the index from the previous year, the indexed interest for that policy year would be zero, meaning your cash value and your credited interest are never at risk of market loss. We call this the power of annual reset. Here's an example. Let's say in the first 2 years of a policy, the index went up, as did the life insurance policy's cash value. The interest accumulated is now locked in. Now let's say the index performance trended downward between year 2 and 3. The cash value and accumulated interest locked in years 1 and 2 are just that, locked in, and would have held steady. While the policy would earn no indexed interest that year, it also didn't lose any cash value due to the negative index performance. But here's the best part. In year 3, the index doesn't have to make up the previous year's losses in order for the cash value to earn additional interest. Each year, the index's ending value becomes next year's starting value. Just a fun fact to keep in mind, in the market, on average, 7 years out of 10 are positive. That means 3 years out of 10, your principal would decrease if you're not in WealthX. Flexibility and choices for the future. Access any available cash value when you want it, for what you want, and income tax-free. Whether it's supplementing your retirement income, an unexpected emergency, or complementing a college funding strategy, WealthX performs. Policy loans and withdrawals can be taken against any available cash value, income tax-free. You can borrow against your policy's available cash value at any time, even before age 59 and a half, and without penalty. And we haven't even talked about the death benefit yet. I always like to say that's why we call it life insurance, because all of the living benefits, but it's also designed to protect what's important, those you care about. WealthX provides your beneficiaries with a death benefit that's generally tax-free. The death benefit will help your family maintain their way of life when you pass away. WealthX is a tax-efficient way to pass on assets, and if you watched the videos before, WealthX can certainly help you grow a lot of assets. No matter how well you plan for the future, you can't anticipate everything, but you can prepare for the possibilities. Secure your financial future with WealthX. Welcome to the Policy Shop. Insurance that doesn't feel like insurance.